Good morning, everyone. Good morning, ladies and gentlemen, and welcome to the first weekly live market analysis. How is everybody doing today? Maria Julia, good morning, and of course to everyone else that hasn't write anything yet. So, did you guys had a good weekend? Did you get some rest? Are you ready for the upcoming week's trading activity? Just a comment last week based on our Telegram. I wouldn't call them necessarily signals, but trading setups. We had a small profits, decent profit, but still profit. So it was good. And now the markets will start, I believe, from the second week, because we're going to have the non-farm payrolls not this Friday, but the Friday after. So we're going to have these 2-3 weeks ahead for some good moves to see reveal. And yeah, maybe not maybe, just close to the 20th of December, they will slow down a little bit. Maria said, yes, we are ready and kicking. Nick, how are you doing? Good morning, Nick. And for our friends, they are watching us from the trading live. Hello, guys. If you need to ask anything or if you need to comment on anything, please feel free to use the chat box. Now, because I use multiple screens, it's a little bit hard to look all the time the live chat, so excuse me if I don't answer some of your questions. So guys, let's get started, always with the dollar index. So what's going on with the dollar index? The price is making lower highs and lower lows, so why to rush for buys? Correct. Price, it's in a downtrend, so we're gonna look for bullishness on the Australian dollar, on the euro, on the pound, on the Kiwi against the US dollar, and bearishness on the US dollar CAD, US dollar Swiss, and US dollar JPY. Okay, so keep that in mind. You see that I marked the 0.5 fib level and 0.618 fib level here for a reason, because if you guys check the weekly chart, that's not relevant anymore. If you guys check the weekly chart, you can see that the price at this point here and this point there broke the structure of the lower highs and lower lows, which it was this one here. Okay, so, and price made a new high. That was the high, that was the low, and price then made a higher high. So we don't have a higher low confirmed yet. Do you guys understand this? There is no higher low confirmed yet. But if we use the fib tool, I will show you right now. Let me just delete this stuff here. So if we use the fib tool from the low to the high, we see, to measure this impulse move, we see that the price retraced somewhere around the 50% of the prior upward move that create a new structure. Therefore, we, yes, do expect some kind of retracement maybe at this point here. Just 1 second. Yeah, this color is fine. So at this point here, we do expect some kind of retracement, or even, generally speaking, between 50 and 61.8%. So I mark it with a box. Okay, that's why I added these levels here. So on the daily chart, we're not going to rush to look for buys on the dollar index. That means to sell the euro and the rest, but we kind of have an understanding of if we're going to see a reversal price action here, and because the price reverses around a strong fib level, and if we look at the left of the chart, there are some areas of support. The price might bounce to the upside. But please understand what I will explain right now. Good morning. Good morning, Humphrey. Just joining. Heda said, you are using a black background today. Yes. Nick from Ghana. Saxton today is starting pretty fast. Yes. Someone says anticipated class. Nice. Sale Basri said there are some areas of support that might be stunning. Yes. Chris said time to gain knowledge here. Spring said lovely to be here. How are you doing? I'm very well, thank you. I hope you guys are feeling great too. So, guys, write this down. A market that shows a kind of rejection around support, but if the price is still below a defined downward trend line, it doesn't mean that it's gonna move to the upside. It cannot go sideways, create a descending triangle, and continue for another push lower. The first sign to talk about a change of trend, there is a whole different story. Here we are talking about an anticipation of the downtrend terminated. Now, it doesn't mean that if a downtrend terminates, if this downtrend leg ended, that an uptrend will follow. That's two different things. For an uptrend, and here that's what I find too much weakness by traders. They don't understand exactly what is a trend. They understand that it's a series of lower highs and lower lows, but when it comes to execution, they get overwhelmed. So this downward move is defined by this high that is by this high that is lower than this high here, and by this low that is lower than this low here. So we have a series of lower highs and lower lows. So we can draw a tentative trend line like this one here. Now, the first sign of trend reversal is the break of this trend line. By that time, we can't say anything about the trend reversal. So until the trend line breaks, because it's a defined and very, very well established trend line, if this trend line still is intact, the price is in a downtrend. So first sign is a break of this trend line. After the price break the trend line, if we're going to see a new low here, then this high will become the relevant high. So the trend line has to break, and then we have to see a high that it's going to be higher than this high here. And the return move will be the first tradable move to the upside. So there is a period of transition for a trend line, for a market to change trend. Okay, now if we see a price action reversal here, it simply means that maybe we have to stop selling. It doesn't mean we have to jump and start buying. Guys, is this clear to everyone? Do you understand it? Yes, especially when trading at trending markets. Olga said, wow, this is a whole different information, sir. That's the reality. You just need to sit with the right mentor or with the proper trader and analyst to learn this stuff, guys. Okay, I spent more than a decade not only trading, but on a weekly basis reading the markets and going back and read again and again and again in order to uh, understand and not only implement it, but also to be able to bring this information out to you guys. Okay, so let's move on. Australian dollar, US dollar. And for this particular reason, I marked the market structure here. So based on the market move, we had this high that defined the new market structure. Reversal here, and price didn't make a higher high, but it didn't also make the lower low. So it's still in an uptrend. Do you guys understand? If you start selling once in an uptrend, once a high is rejected at a previous swing high, and you start looking to enter short, and you think that, okay, this move ended, now sellers are going to take control and we're going to see a lower high, a lower low, and lower high. But you have to aim for, in my opinion, just generally, if you're going to take these trades and you don't allow the market to show that period of transition and be patient and take the next wave to the downside, and you are rushing to sell the top, you have to be able to experience losing trade too often until you get to the point you're going to get one winner that is going to give you likely 6 or 7 to 1 in order to cover previous losses and make profit. All right. And again, please pay attention to this. There is no right and wrong trading setup. In futures markets and in high volatile markets like the Forex market, the crypto markets, there is no such a thing, only trade with a trend. Why? Because there are very, very good opportunities on different time frames that you can trade against the trend. But you can understand that if you are trading against the trend, it comes down to maybe reducing your risk. Okay, it's all about risk allocation. It's not about being right or wrong, and it's not about trade with this trend trading. Now, let me just explain you at this point, and if you want to note this down, the reason all the information we have on the net and on the YouTubes and all, specifically all the books, they've been written ages ago by great traders and analysts. What they used to trade back then, it was only the stock market, right? Nobody used to trade the Forex market. The currency pairs became available just before the maybe 1998 or in 2003 onwards, in 2000 onwards. So all the books about technical analysis, about price action, everything, they have been written way before that. So all these authors, they used to work with the markets on the exchanges, and also, but based on the stock market. The stock market closes for 16 hours, right? It's only open for 8 hours. So always there are gaps there. So if there are gaps there, it means all the price action that it's been written in Japanese candlestick and all this stuff, they are applying to these markets. But in Forex market, because the market is open 24/5, it's a bit hard to apply exactly all this information. We have to readjust them a little bit, or if you prefer, we can twist them around. But when it comes to trend trading, back then, before the currencies, let's say the stocks, they were retracing maybe 23 8% or 38.2% of the moves. Now it's very often we see the markets retracing about 50% of the time their origin move. So there are tradable opportunities even against the prevailing trend, which is fine. It's nothing wrong to trade that. It's just you need to have a solid strategy on how you're going to trade that, and you need to understand the second that it's a low probability trading setup. That's why you need to consider how much you're going to risk on this type of trades and how much you're going to risk on trend trading. Okay, so please keep this stuff in mind. They are extremely important in your trading, and it's nothing wrong to trade against the trend. Yes, ideally we have to, it's a higher probability to trade with the trend, but again, you can trade anyhow you prefer. It just comes down to how much you risk on high probability trades and how much you risk on low probability trades. Okay, so any questions? Do you understand what I explained so far? Okay, do you have any questions? Please let me know. So let's move on with the next one. Australian dollar, US dollar. The market structure started from this point here. We said this high and this low, bullish engulfing, and price made a new high. So this high becomes the high for reference and this low becomes the low for a reference. Now, I found it easier to use these lines here with high and low so I can show you guys where are the impulse move. So today the current price action on the daily chart is trying to break above the most recent high, and therefore it can create a new high in the market. We will see what's going to happen after this daily candle complete, and maybe we're going to move the new high after the reversal price action. But anyhow, the overall trend, it's up. Price makes consistent higher highs and higher lows. There is a resistance area at this point here where I draw. You can mark it on your chart. That's 0.66167, where price can find some resistance and we can see some move to the downside. But again, if the price comes here and get rejected, we can trade it. It's fine because it's at the resistance. We have a trading plan and a trading checklist how to enter in this type of market. But we have to also understand we are trading against the trend, and on your trading execution, you must also have the rule of how much you're going to risk on markets that you're trading against the prevailing trend and on markets that you are trading with the trend. So that's more bullish bias for today based on the market structure here. Well, what are your trading checklists, sir? From Ives. I will explain you in another webinar, okay, about what I'm looking for to enter the trending markets, the ranging markets, and the markets that they go against the trend. Next one is the euro against the US dollar. These are intraday levels. So if you are trading intraday, that the high becomes your relevant high for maybe taking some profits, or if you find some ascending triangle patterns, consolidation that they indicate the price might explode, you can take it. But be careful, there is another area of resistance right here. It sits around 1.1004. So again, in this market here, price is making higher highs and higher lows. I was looking last week to enter long somewhere here, but because I didn't do it. Why? Because the price action here, it wasn't the the width wasn't at least twice longer than the bot. That's why I didn't enter the market. But overall bullish buyers, at least until the price will test this area of resistance. Next one, pound US dollar. It's in a very well defined uptrend with rising peaks and troughs, higher highs and higher lows. And we might gonna see strong move to the upside. To be honest, this week there are no major news events in the UK that they can change or boost the direction of the pound, so we're gonna treat this upward trend as normal. Unless something change in the US dollar, then we gonna see these bullish Marubozu candles on the chart. Okay, do you guys know what are the bullish Marubozu candles? The bullish Marubozu candles are very long candles with very small wick at the top and very small wick at the bottom, and they indicate strong buying pressure. And from my experience, if you check, not if you check, I checked, okay, and from my experience, the middle of this Marubozu candle has the significant amount of volume. That's why it becomes the 50% of these Marubozu candles usually becomes an area of support on price retracement. You can write this down and learn it as well. New Zealand US dollar, tomorrow, or is it tomorrow? Let's check it out. If you want to read more on the candles, I suggest the book by Steve Nissen, The Japanese Candlesticks. So it's not tomorrow, it's after tomorrow on Wednesday. The Reserve Bank of New Zealand, it's about to announce the new interest rates. So it's going to bring insane volatility on the queuing, but there is an area of resistance found to be there around the 0.61103, and maybe the market will react. A positive news and a follow through by the kiwi, it's going to break likely to the upside, or if it's going to find if we're going to see a false breakout with a proper price action like bearish engulfing or a shooting star, we will be happy to take this trade to the short. Next one, USD Canadian dollar. Price makes lower highs and lower lows, and therefore this is bearish. The support, it's around here, 1.35630, and we do expect to see some move to the downside. Now, I didn't take any trade on this one because on the daily chart, the price action, it's on the move. I wouldn't be interested. But if you guys trading on the 4-hour chart or the 1-hour chart, you can look for, you see, that was a very, very nice setup here. But again, there will be interesting setups on all the time frame. It's just on which time frame do you guys usually trade. No, this is the swing, and therefore price came all the way in between the area of 61.8 and 50%. That's why I like to treat the 61.8 and the 0 and the 50% at some area, because the price can tap in, false break, and then directionally move to the downside. Okay. And yeah, the next one, USD CHF. USD is weak, so we do expect some more weakness here until this area of support, 0.87449. USD JPY, that's what we must keep an eye on. So double top here, yep. the neckline, price retested, and now it's moving lower. The move already started during the Asian session. Trust me, if I was awake at that time, it was this one here at 3 a.m. my time. So bearish engulfing 2 a.m. my time, just a few hours after the Asian sessions. If I was awake, I would definitely be into that trade. Okay, but I don't like to chase the price. So if I missed an entry, I missed an entry. It's all good. Now let me tell you something. We're gonna check a couple of more pairs before we end the webinar. Let me show you something here, guys. What I just said before. So this one here, it's a support, right? And price last week, it was Wednesday. No, it was Tuesday. So on Tuesday, everything was looking very bearish. Okay, lower highs and lower lows all the way, long candles, red candles, and at some point this was a red candle and it ended up being a doji with long leg weak doji. Okay, and that's a bullish signal, of course. Now if you take this trade to the upside based on this support and based on this price action, that's absolutely fantastic. That's great. Nothing wrong with that. But if you don't take seriously that it was a higher high here, price retrace, deep retracement, shows weakness, but price tried for another rally. It didn't make a new high, and then it broke below the reference of this swing. That's the low, and it created a lower low. It created that lower low. So you must be cautious that the trend from this uptrend now ended. And the break of the trend line, we said, is the first thing we look for, a change direction. And then the second we look is for a new lower low if it prior an uptrend, preceded an uptrend. So then we have a likely trending change and a downtrend will start. So at this point here, once you see that the price didn't explode and keep rallying, then if you bought there with a stop loss below the low, you should be very skeptical about maybe the market is not in a strong buying momentum. So maybe we have to either take partial profits if we believe that price will rally and maybe move the stop loss below the low of this bullish candle or at break even or below the low of this inside doji candle, or just do something. We have to read the market. The idea of set and forget, like place the order and forget and either hit the take profit or the stop loss, it's very good concept on lower time frames. On higher time frames like the daily chart, because we can easily trade price action itself with the overall market structure. Of course, for increasing the high probabilities, it's very easy to move stop losses and to decide. The market talks, the market speak to you, the market shows you what it's about to happen, most likely what is about to happen next. So you can understand this, you can amend your trading setups, because day by day the market changes. They don't stay the same. Okay, we saw this one here, it's in a downtrend. Also, let's keep with the hope. Yeah, many things can happen. Maybe the price is going to come here, it's going to make a bottom, it's going to move up, it's going to make like this, it's going to move up, it's going to move down. Who knows? Okay, but here we are trading these probabilities. We are trading what we see and not what we want to see. Okay, that's a different story. Tegan asks, it is best we take partial profits or just close the trade? It's up to you how you feel comfortable. For me, if it was, if I was in the trade, that I'm not in the trade, because I was looking for short, not for long, without meaning that if you guys bought is wrong, absolutely no. But I will have been out of the, I will have placed my stop loss below the low of the Friday's candle. So if the price moves below there, to be out, to get out of the trade. Okay, but if you believe that here is not for your reason, if you are looking this as an uptrend, higher highs and higher lows, and if you think that this is a deep support and it's still in an uptrend for the, based on your trading method, then you act accordingly. Okay, you can show this pair to 100 traders and you can get literally more than 90 different opinions. Yes, Andrew, that's correct. By looking at the footprint, we can understand what the market wants to do. Guys, I think that's all from me today. I hope here at MarketMinds Mastery, we really add value in your trading. Our purpose is not to do just a webinar like, regardless that it's a free market analysis, market updates. We love what we do. We support traders. We understand that there is a lot of misconception in trading, and you finally need to sit with the right person. I'm not saying here at MarketMinds Mastery we are only the right people that they do analysis. There are many brilliant traders and analysts out there, but you need, at some point, you need to filter, as I always say, who is the YouTuber and who is the trader. I mean, if you go on my YouTube channel, you're gonna see that definitely I'm not a YouTuber. Very average videos, not fancy, nothing. It's just pure information on trading. Okay, so please understand, because when you want to trust somebody's information and you're gonna follow that that opinion, it has to be, it's gonna be, if you accept it at some point, then it's gonna be a little bit hard to question it, because you already accepted it and you already proceed with implementation. Okay, all right, enough for today. I hope you guys had a fantastic market update. We know what we are looking for the next of the day. We spend a little bit more time to explain some important things about trend and trend reversals, about how to enter the trade in with the trend or against the trend. Nothing wrong with that. I repeat, it comes down to how much we are willing to risk per trade. From all the team here at MarketMinds Mastery, myself would like to wish to everyone to have a fantastic trading day, and we are looking forward, and I specifically look forward to see you tomorrow at this live at the same time. Thank you so much. Bye, everyone.